All right, good evening, guys. Welcome to the nightly strategy podcast for Tortoise Capital. It is November 1st, 2020. A couple things. I'm going to investigate YouTube live streams. There may be a way that gets that recording gets posted on YouTube faster than the way I'm currently doing it, where I record it here, process it, and then upload it to YouTube. That delay sometimes is troublesome. So I'm going to check to see if I can do live streaming on YouTube and have it, and also have it recorded right there, and that may save a little bit of time. Second thing is the Saturday morning coffee talk yesterday was really, really good, I am told. There were a couple sections in there. One of them was on almost a stoic psychology lesson on resiliency and mental toughness and integrating your personality and experiences in order to support trading proficiency. And then the second part was a discussion on the VWAP. And I think it was a pretty good rendition of my beliefs about price action, buyers and sellers, and how the VWAP and the RL270 act as long-term stable measures of fair value that we can then measure the strength of traders to move away from that fair value, either as a head fake or as a reversion to the mean trade. And it, I think, connected back to the idea of the Z3P, the super pinch, the supported spring and fall crossings, and it seemed to resonate pretty well with folks. And so I posted that link on the October index for the strategy podcasts, and I really recommend it to you as a way to get connected to first principles. I'm feeling a need to redo the hybrid trading workshop again in like an expedited form. We've got a pretty good set of videos for prep and then the lessons themselves from June, but I feel like I've learned a little bit more about how to integrate them a little better, and it may be time to do that. So I'm going to contact the Tharp Institute, see if they want to gather up a collection of a cohort of students that could start that at the same time. And I seem to do better when there is a sort of a dedicated audience of doing that. I'll let you know how that goes. The fourth thing is Joe Greco is a certified financial planner and a certified public accountant, and has been working along through all the material over the last year or so, and been doing some great work on psychology and personal strategic planning. And I invited him to the True Storytelling series of workshops that I'm attending as a student and as a team member with my mentor, Dr. David Boji, who's one of the world's authorities on narrative inquiry and storytelling. And so we're developing this little cottage industry, it feels like, of true storytellers, which is the principles of how to find what's in your heart, share that with others with confidence and transparency and honesty, and to learn to be a good listener in that circle and to be supportive, and then to build a network of people that want to change the world in positive ways. And Van Miller, who's in here, has heard some of that, and Joe's been attending. And inspired by that experience of telling deep truth from the heart in a circle of perfect strangers, Joe has found some new energy and sent me a template for a course he's going to teach on basic financial literacy to the 7th and 8th graders at his church that go to school with his kids. And I looked at the outline of it, and the blinding flash of the obvious hit me, which is that we need to get him to put together that course for all of us and for all our kids and for all our neighbors' kids. And so I'm going to strong arm him into doing that in a way that would scale. And then I told him that if he would do that, would be willing to do it, I'll host it for him on Patreon and or talent management system, whatever, some appropriate distance learning platform. And that will motivate me to build out and finish the systems thinking course, like systems thinking 101, and then a 202 course where systems thinking is applied to trading. But there's some basic training on systems thinking I want to do that I also think would be very helpful to kids. And then I just got certified on a series of modules in positive psychology from one of the world's authorities on positive psychology, and I'm licensed now to deliver the materials and host workshops and all that. And so I'm going to put together a kind of a basic skills in positive psychology for all comers. It's going to include things on mindfulness, finding and leveraging your strengths, goal setting, performance and motivation, emotional intelligence, resiliency, forgiveness and gratitude, and the basic tenets of positive psychology as a way to reshape your world. My spider sense is that connection between that and the principles of true storytelling are going to align very nicely with this learning community practice that we have in here. So I'm going to impose on Joe to build out a nice, concise financial literacy basic training program for us. And I think that will encourage me to update the core course as well, because I think that aligns with it pretty well. But then these other two support courses, systems thinking and psychology, I've been accumulating the lessons and the basic training to be able to do that. So now I feel like that's sort of the next step for the new year for 2021. So I think the best way for me to do that is, once I get those materials lined up in the right order, is to just run an online workshop with weekly lessons and invite a select number of folks to go through that, to be the live studio audience, if you will, and to help shape the course in their way. And then that will allow me to put the home study course together by teaching it instead of just lecturing at the screen. I find I do better when there's a live audience and people to engage with. So I'll be putting out some kind of note on there for a limited number of, I would call it beta testers, at a very much reduced rate. Platinum members will be able to just attend it as part of the package, but for non-platinum members, I'll make it a sweetheart deal for attending just those courses kind of on their own, so you don't have to bump up to platinum just to have access to those. So more to follow on that, but I wanted to give you a heads up and let you, if you're interested in reserving a place, the price point on it's going to be really nice, especially compared to what I'll probably end up selling it for individually. The individual courses will probably be around $1,000, maybe $2,000 for the full bundle of psychology, because there's 6 separate courses, probably 50 lessons. But I'm thinking about a couple $100 instead of a couple thousand for the beta testers. Okay, so if you're in the sound of my voice and you're interested in that, to reserve your spot, just go ahead and send me a note, and I'll put you on the list, and you'll be happy with the price, whenever I figure out what that's going to be. Okay. Just let me get started here. Yeah, I guess the final thing I should say, Dr. Tharp invited me to make a presentation at this virtual Super Trader Summit coming up, and asked me to, put together a couple hours of material, and I'm actually thinking to recap the lessons from yesterday morning would probably be pretty good, because I really think those were foundational and fundamental. So that's just another way of saying, if you haven't listened to it, I would encourage you to make time to listen to it. Okay, so we got about a dozen charts to go through here real quick, from Pavel, and I think maybe Catherine uploaded some too. And I want to preface everything by saying that the most important thing in the market right now is the election and the uncertainty that will come from announcing a winner of that election. And that's going to override every other element of technical analysis that we have. We'll be able to use the technical analysis to continue to distinguish between normal and abnormal moves. But if there ever even was some way to estimate what direction and what magnitude things were going, it's less now than ever, just because of the special psychology of this election, which feels different than any election that I can even remember. I mean, the contentiousness between the candidates, the genuine hatred that emanates between them, and the fact that both sides seem to despise each other so much. I haven't seen anything like that before. So I'll just say that there's a guy worth listening to. What's his name? Is it Ben? Yeah, I think it's Ben Weinstein. And he does a thing. He's a evolutionary biologist, and he has a thing called the Dark Horse Podcast. And he just recorded a 2-hour discussion with a genius of a conservative journalist and commentator from England, Douglas Murray. And Weinstein was the famous professor at Evergreen College who was a real leftist liberal, but who believes in the importance of academic freedom and free speech and so forth. And he was one of the most popular professors there, and then got basically stepped on by the students who were rebelling against the idea of free speech and Western civilization and the scientific method and equality of opportunity between the races and everything. It was just a horrible thing. And so this is Evergreen. It's either, I think it's a college, not a university, maybe a university. Evergreen out in Portland. And this is in the 2017 era. And this was emblematic and symptomatic of this rage that is racing across all of the universities in the United States to one degree or another, but usually at the more elite and pricey ones, oddly enough. Well, the conversation between Weinstein and Murray is endlessly fascinating and worth listening to. But in that, they kind of discuss Weinstein's idea of a Unity 2020 movement, in which they're trying to get out of this black and white binary fight between Dems and Republicans to see, well, I hate you. No, I hate you more. And so you have this these polar opposites in some ways, hate-filled rejection of the other side and the inability to have any kind of civil discourse. Well, Weinstein takes the position that, like I do, and that is that this is really just a single-party situation in which oligarchs, the corporate oligarchs, and oligarchy, in which corporate owners who own the media and all the multinationals are really setting this up as a circus, and are donating to both sides. And then when you look at the commonality of the actual policies that both sides end up enacting, it's really all the same, and all of it is designed to send money to oligarchs. So if you take a look at the $15 trillion of bailout money that's already been committed by the Fed, that's the greatest upward transfer of wealth in the history of humankind. While at the same time, 50% of the nation are living paycheck to paycheck. 85% couldn't handle a $500 emergency bill without extreme financial hardship. And there's probably 6 million households that are in danger of foreclosure. And we still don't have health care. And our military budgets are going up. And both sides are in a race to see who can make Russia and China the greater enemy and beating the drums of war, all of which reinforces the current civil military industrial complex. And yet we still don't have health care, $15 minimum wage, guaranteed college, reduction of student debts, a Green New Deal, secure energy, and the world is getting a little bit tired of our shenanigans. So the Unity 2020 campaign is an idea that where they're floating the idea. So what we should have done, and they ran some surveys, and they said we need to pick one person from each side that is the most well-respected, have them run together, flip a coin, and take turns being the president and vice president for 1 year at a time each, and operating like a consensus. Well, there's another word for that, and that's like the consuls in the Roman Republic actually modeled exactly what that looks like. They didn't like each other or have to like each other, but that gave a diffusion of power in the executive to the extent that only the things that both sides could agree on were things that got enacted through the Senate. And it's interesting that the two of the people that I admire the most came out of their sets of surveys, and one of them from the left side was Tulsi Gabbard, and the other one was Dan Crenshaw from the Republicans. And we could do an awful lot worse than that pair. They're both pretty amazing, and both veterans, and I got just a ton of respect for both of them as real patriots trying to work within the system in order to bring about positive change for the people. So if you're interested in any of that stuff, I can really recommend not Ben, it's Brett Weinstein. His brother is Eric, who is an interesting PhD computer scientist, kind of a mad scientist, and together they both got two of the biggest brains you ever saw. But Brett Weinstein and the Dark Horse podcast is a very strong signal to noise, and I have never yet heard Douglas Murray utter anything less than amazing and brilliant commentary on any topic. A very well-traveled, well-educated, thoughtful, persuasive, reasonable journalist who happens to espouse conservative principles, but is well aware of the importance of this tension between preserving and expanding, and so there's a need for both of those things, where you are preserving the best of, but you're also growing and expanding in new areas, and then there's some kind of common ground where people should be able to meet. And it fits the media narrative right now that people are driven apart by social media and the algorithms that select headlines and news stories and distribution that increases the tension between both sides of the political spectrum, because that promotes clicks, which sells advertising, which supports what the oligarchs want. It's just horrible. So the Unity 2020 campaign, and Brett Weinstein, who's pretty smart guy, is a pretty thoughtful commentator, and Douglas Murray are definitely worth your attention. But I say those things just to point out that this political crescendo that we're coming towards here in the next couple days, and then over the next couple weeks, as the inevitable fight over how to count these votes is going to just make us lose our mind. It's going to make the current political situation look like a nice, polite tea party, so it's going to get pretty bad, and it's kind of absurd, isn't it? In the year 2020, that we don't have a foolproof. We have credit cards, but we don't have a foolproof way of validating identity and counting votes instantly. That's just absolutely absurd. But there's a reason for that, because it promotes the kind of public anxiety and agitation that supports the income generating process of oligarchs who get paid for the social unrest. Just shameful. Anyway, so I say all that just to say that most of these are going to be, every one of these things we're going to look at is going to be shaped by this the election coming up, and then the aftermath. So for I think a minimum of 2 weeks of pure tactical trading is the order of the day. Okay, and so the charts we have now are a pretty good sample of the things that we like to trade the most, because of the way they oscillate reliably in long, smooth waves, are very liquid, and also represent a sampling of all of the big sectors. See, we get some diversity in the sectors. All right, so we're looking at Apple now. So Apple in this yellow zone right now, I agree with that. It's at Z2. So normally we would think of the opportunities as being between Z2 and Z2. So here we are, the peak of the RL10 and the current RL10, all both anchored at the current Z2. So that gives us a nice range of movement between about 106 and call it 124, which is an $18 spread, which is about, call it that's about 15%. So a nice range for swing, and this is a nice support level down here around 108. The last time it held support here in an orderly fashion, it then gave us one leg up, two legs up, one leg down, break, second leg down. So this would be a natural place for it to find support. People looked at this as an opportunity to buy Apple on a 15% sale, and why wouldn't you? And once we get through the shenanigans, that could end up being a really nice entry point down in that area. Waiting for it to break above yesterday's high is not irrational, around 112, with about a $4 stop. Gives you a nice tactical play. You can probably get a better, tighter stop on the intraday. And that's the way I would recommend playing it. If it makes a nice move and recovers, I think if it gets through 115.5 in this one, then that's where I would keep 1/5 of the profits as the swing trade, and just trust in the fact that everybody, regardless of political persuasion, has to own Apple for the long term. So on the downside, I think those are the places that I would get short, at the daily low and the Z2 and the Z3, and then probably the previous Z3. But I also think that there's better symbols to short out of the tech zone than Apple, just because I think inherently there's still a lot of buying interest in Apple longer term. So although I don't disagree with the way those are drawn, I think there's better targets than Apple for being short. There's not a money manager alive that has as much apple as they want, and they're looking for long-term positional advantage. So there's, as far as the eye can see, there's buying interest for Apple. But I like that trade frame, especially to the upside. I think it gives us reasonable posture. Let me see. I'm going to try see if 3D paint is going to work here. Okay. So let's get yeah, that's going to work good. Okay, because we got a lot of symbols, and sometimes that screen snipper from Microsoft locks up sometimes. Okay. Oh, I like this. We're looking at, we've marked up leg 1, leg 2. Here you can, it may, from the PSAR to the PSAR, and from the PSAR flip to the PSAR flip. So he's calling that leg 1, leg 2, and now projecting a reasonable leg 3, getting down around to 25. And that's nice because we've already violated the previous belly of the dragon, and we're right at the belly of the RL10. So that does give us a reasonable set of targets to the downside. So I love getting short here in EWZ. Second position at Z3, third position at the peak of Z3, and then the fourth one at the current violation of fair value. So I love that's a great way to get short swing positions on, and that's one. I said before I wasn't interested in swing trading, but really I'm thinking on the long side there. But in terms of this one breaking down, that's a trade that I would hold to the downside, because you can see the power of a frog champion on a swing right here, that if this continues to break, there's nothing back here that's going to hold it up. To the upside, though, I also like this, because if it can hold here and hold here, and now this breakout looks like it at least gets up into here to test, call it 29.5, without much controversy. So if you can buy this thing at 27, and it's going to test 29.5, your reasonable upside is 2.5, and your risk is about 40 cents. And so that's a 6-to-1 reward to risk, just on a retest of a non-controversial high. And if it only gets as high as the previous VWAP, so halfway up, well, you still have a 3-to-1, and that's worth taking. So my spider sense is that you can see this thing open with a tight, maybe a 25-cent risk box on it as a hybrid frog, and you trade that in either direction with that trailing stop. And then I think if it breaks above 27.75 and looks like it's going to close above 27.75, then that's where you keep 1/5 of the intraday trade, and then use something like a 50-cent instead of a 25-cent risk box, and then you'd be in good shape. So great frame in either direction. All right, next up is DIA. All righty, let's get this thing going. Okay, so DIA. Now this is a bit problematic here, and this is emblematic, I would suppose, of the U.S. market. So you have, these checkpoints. So it went up in two legs. So 1, 2, came down in two legs. 1, 2, with that intermediate checkpoint right along the Bollinger Band mean. This one did not get quite as high as the other one. So there is a slight downward arrow on this, which means that now this could be more like, this feels more like that now, doesn't it? Somewhat downward pressure. So it really does have to get through 283.5 before we have any kind of confidence that this market's going to recover. But since we're engaged in tactical trading, this little yellow zone here is fine. I think I would wait to see. I would trade tactically in here with a single position as a swing. I think I could add a swing at maybe 268. If it's going to get above 268, I would hold 1/5 as a swing, with the idea that it could recover to get back to here. There's so many symbols on a channeling, the whole market is pulled back 10%, that there's going to be some, I think, significant pressure to buy things on sale, because once, it could very well be that statesmanship will emerge where it hasn't before, and gracious resignation of the position for the good of the nation. It's harder to imagine that. I mean, the last time this was an issue, it was George W. Bush versus Al Gore, and Al Gore showed some amazing statesman-like qualities, even though there was very good argument for him to fight, and he said no for the good of the nation, which was pretty statesmanlike. I don't see either one of these knuckleheads rising to that level. There's just too much vitriol been invested for that to happen. And so we might play a brief swing to the upside here, but I think it's got to get above 283 before we leave all this political shenanigans behind. 283 seems to be the key for me. And then certainly if it gets above 287, the hump of the dragon, well, then this thing is really going to go. Downside, you can see this is, we're looking back 3 months worth of, it's already violated all of these support levels in here already. All that's gone. And this is really just naked fear level right here, that if it gets below 253, man, that thing is just going to be miserable. There's another 20% drop off of that. And there could certainly be political reasons for that to happen. So I am more inclined to take the short side swing with 1 position, 2, and 3. I think I could live with that. Upside, I think I would be more tactical and play the intraday frogs and hybrid frogs and chain trading. And I think I'd have to see a close above 268 to keep 1/5. But man, I would be, that'd make me nervous. But I've been nervous before. But I think that 268 would be my trigger point for that. Let me see if we have any. Let's see, Caterpillar here. Caterpillar makes me feel an awful lot better. we have a clear leg 1, measured pullback to the Bollinger Band mean. Leg 2, measured pullback to the Bollinger Band mean, and actual evidence of a resumption already happening. And the fact that would give you a low, and this if we got this kind of move, this RL10 would roll over and look like that, and that would give us a higher low. So I really like the upside here and getting those positions built. I'd like to get 3 positions in by the time it comes up to test the VWAP, breaks out of the dragon, test the VWAP. And then if this goes, you could add a 4th position up in here or here. On the downside, yeah, that's the first aggressive place to get short. I mean, there will be other people waiting to see it break below 150 before they get short. But I think if it broke down here, you could be front running that, add a 2nd position here, and then a 3rd position at the violation of the belly of the dragon. And then you'd be in great shape on a test of, call that 140 down in this region. So I like Caterpillar as a candidate for the long side. But in the if you saw Caterpillar failing and the Dow failing, that and even Home Depot, so I think this is kind of so DIA, CAT, HD, and maybe even United Health. If you saw those from the industrials and consumer staples and then healthcare, if all those were failing while DIA also failed, then that's your tell that the downside is happening, and then Caterpillar's a reasonable place to strike. Next one up, U.S. Steel. Now here's one that the downside is arguably a real thing, just because it's been doing so much better than everything else that there's going to be some urgency to want to preserve that, right? The very fact that it's been outperforming makes it especially vulnerable to selling pressure to preserve those outside gains. And that's the argument that I'll make here. No matter how good the news story is, I'm always ready to cut and run. So we've had this long, period of sideways after some gains, and then a sell-off, a long period of sideways, and now first bump sideways but held support. Second leg, the second effort has been good, and now we're back to this stable position here. Now notice this has not sold off. It got as high as, call it 1016, and as low as 916, so that's $1 on 10. This sell-off from here to here was about 10%, but it's already recovered most of it. So any breakout from here is a vote to the upside, and I like getting extra positions on this thing because it is it's so close to breaking out from that previous high, and it's already breaking out above the previous hump of the dragon. So this would be a second leg up, and the size of this leg up was from 8 to 9.5. So this thing could get to 11.50, or we'll call it 12. Yeah, this thing could get to $12 on this next move up. So I really like U.S. Steel there. But then the downside is if it breaks here, and then getting a second position at the PSAR flip, this thing could run easily back to 8. So its very outperformance makes it in a critical state at the end of a nice run up. And again, the same idea that if you saw DIA down and CAT down and HD, and in this case XLB, if all those things are suffering, it wouldn't be unusual for X to be even worse because it almost trades like a growth stock in that sense. So I think this is the highest priority of the ones we've seen so far for me. All right, here's Tesla. This one was part of all the techs just got shredded on Friday, and part of that was that testimony from Twitter and Google and Facebook. So if you did that whole area, you can play with NY Fangs, that ETF. But they all got slaughtered, and part of it is that they make convenient targets for whichever party wins. You know, if the Democrats win, these guys are the tech corporate oligarchs that are making tens of billions of dollars while the people suffer and the rest of the economy is getting crushed. These guys are getting rich beyond anybody's imagination, so they become natural targets to smash. Plus, the Democrats, even especially if they win, are going to want to put more controls on these guys in order to control the narrative of social media communication. So they've been benefiting from that right now. But once they get actual power, they are much more likely not to trust them to continue to support the Democrats, but they will enact legislation that severely restricts their ability to perform editing and censoring like they've been doing voluntarily. So the Democrats, I think, are going to get on board on that once they can get past the election. So that the techs who think they're currying favor better just watch themselves. Well, Tesla, I say all that about Twitter, Google, and Facebook. So Tesla's not a social media guy, but they've been so wildly successful that I think they just got caught up in the hype. This to me looks like a real buying opportunity in the same way that this was, in the same way that this was, in the same way that this was. So this anything below 400 is kind of an alert to the folks with a long-term time horizon who are thinking about 500, 550, and 600 as a step ladder towards Mars. Did you know that there is a asteroid out there in the asteroid belt that has a value of 10,000 quadrillion dollars from the known deposits of precious metals? The GDP, the value of the Earth, the GDP of the Earth is 147 trillion, and that asteroid has a street value at current prices of 10,000 quadrillion. So you wonder why those guys are interested in space? Tesla, Google, Amazon, Virgin Galactic. You think for the good of mankind? No. That's why. Asteroid mining. So Tesla, I really, yeah, if this breaks out above there, man, just buy them. This checkpoint right here at 350 is really key. This is the tactical buffer 350 feels like an important support level in the same way that it was here. So in my view, that's a lot of people look at that as a buying opportunity. I'm one of them. Oops. Cliff Natural Resources this is an even easier view of the same situation that we saw in U.S. Steel, and that was for the longest time we had these boxes, and had a nice doji where everything else got smashed on Friday. This one didn't. So if we see this little cluster of XLB, Nucor, U.S. Steel, Alcoa, and Cliff, this nice little sector. So we're watching SPY, DIA. And so if DIA is greater than SPY and XLB is greater than those, you want to pick which one of those four is doing the best and get those. And Cliff is easy to see on a breakout above about 850. He just has to get above 875. And then really, I guess right about there. And at 9. So if he breaks above 9, you'd want to have about 4 positions on that guy. So that's how I would play that one. But then on the breakdown, first position short, second position here. I think I'd maybe go a little bit sooner than this. I'd want to get a third one in right about here, and then a fourth one there. This thing flows nicely as a swing trader, and the fact that you've had this nice move in here from 6.75 to 8.5, that's almost $2 on 7. 2/7 is a plus 30%. So if this does start breaking down, there's going to be a lot of guys running to the exits to preserve the gains on the way up. So that's why, even though this does look really strong, this preservation of profit is going to be very motivational. So this is another good one. This one, just like U.S. Steel, for the same reason. So Wheaton has been just breaking people's hearts as a failed defensive play. It had its great run up in the summertime as a defensive play, but hasn't really done anything since. And in fact, at a time when you would expect it to really be attractive as a defensive play with gold and silver, it's done nothing but drop, drop, drop with lower lows. See how nicely that RL10 helps us? But the fact it's getting ready to roll over again. So if you just connect those dots, this is entirely not unexpected. And the fact that it's rolling over here instead of down here says that, you wouldn't be wrong to think the next target is 49 in the next 1, 2, 3, 4, 5, 6, or 7 days or so. And that it would have to break above 50 to really think that this would be reversing the trend. So this could be the first leg. This would be the second leg. And this might take 2 steps to get here, and then that breakout. This one is the important breakout. So I like a continuation play here. And if it got even as high as here, I'd be looking to preserve that profit. So I think that's the first leg. I think this is the second leg to here. And then the breakdown, it's just easy to see that this would be the start of an even bigger leg of selling. So I like this one as a critical state. I don't think you have to have, as a swing trade, I would say, you could have that much, 43.74, and then a breakout at 46. So you're talking 2.25 of risk box. But I think intraday with a 50-cent trailing stop, you could, whichever way that opens, you could do a 50-cent box, hybrid frog it, and go either direction. And then if it does break out of that wide range, then you could keep 1/5 as a swing trade, and then you'd be really happy with that. Okay. Devon Energy is going to give us a similar look. This is even more exaggerated than the Wheaton Precious. And now notice, though, the upside. So you had a kind of the strong downward move, and the PSAR was valuable. But now this PSAR flip gave us the first leg up. It's holding basically where it held before. And then this almost feels like chase everybody else out, and then you get 2 really strong days on an energy sector that's been beaten down. So there's already guys that are willing to preserve $1 worth of gain after buying it around $7.80. So they're already guys that are holding this price right here are already plus 15% on a 2-day trade in here. So this could very easily hit the PSAR and roll over, or hit just the top of the dragon and roll over, or just gap down and drop. That would be the least surprising move of all, because energy's been so horrible. But for that reason, the upside target to 10 is right there. So if you're buying it right around 9, your upside at 10 is an 11% gain. That's nothing to sneeze at. And this width here is only about you're risking about 30 cents to make $1. And there's your 3.3 to 1 just on a test of 10. And then if this breaks, it could certainly get to 10.5 and 11. So there's almost another $1 worth in there. So the upside and the downside are both pretty clear. And energy's been so volatile that should also be on your short list. Devon Energy, great American company, but trades like a rocket ship in both directions, which is why we loves it. And Twitter just got assassinated. Jack Dorsey just got in the crosshairs. He was a target by Ted Cruz, and you do not want to be questioned by an adversarial Ted Cruz. That dude is good. at what he does. He shredded Jack Dorsey. Did not let him off the hook. It was painful to watch. Painful for Dorsey. I just appreciated Ted Cruz's expertise at taking apart a witness. So this is part of that congressional testimony. Then this happened, and then that happened. So you not only get this leg down, but you got that second leg down. And if this breaks below 40, then 38 all the way back to 36 is in play. That's the next big chunk down. And I've been touting Twitter all along, and have been making bucks as a day trade and a swing trade in here. This one got me out in a quick, fast, and in a hurry. But now I'm still very interested on the rebound, just because there's so much emotion built into this sell-off. From 52 to 40 is minus 12. That's minus 25% in 2 days. That'll get people's attention. And I'm sure there was some panic selling in there. So Twitter's something I want to own 20 years from now. So I'm always interested in the opportunity to buy it. And I would take 38 as the true swing support level. So if you're buying it around 41 and it's at 38, you got a $3 stop. That's about an 8% buffer. That's fine. So even if it does come down, if it can give me like a supported spring crossing intraday down here north of 38, I'm excited. I will be short if it breaks below the low of the day, but I'll also be ready to reverse intraday with a supported spring crossing and then start a buying program believing it's going to look like that. So Twitter is on my short list of things to really concentrate on. So continuing in the narrative trend of techs getting slaughtered, TECS is the way to play that with the inverse, and it just feels a little different than seeing the triple longs getting smashed. This one feels more just like a routine opportunity, whereas shorting the techs and a triple leverage might feel harmful. But we are right at a crucial level here. This time it gave a head fake and got crushed. This time, crushed. This time, well, let's see. Critical state. There's your risk. Call it $1. I play the breakout in either direction with absolutely no hesitation. If it's failing, I will be in TECL. So you have this TEX for the short side and TECL for the long side. That's going to be the fastest thing moving. And they'll be testing to see who are the weak hands in the technology. So if you don't want to play an individual company, and that one actually gives you the ability to get short the whole sector with a significant position at that low price. And it's round numbers. I think we got one more. IBMs. You know, this was a company that announced a brand new business strategy that everybody liked, and it was good to go. And, then, and it was everybody was loving it up here at 130. And 2 weeks later, we find ourselves down in here. But I like that bottom. It almost feels like a washout bottom. There's the RL10 crossing Baby Dragon. That's your supported spring crossing in the earliest possible stages. So, I see the move to 120 as just the recovery back to long-term fair value. And it really does have to get out of 125 to be to really start taking advantage of all the goodwill that was expressed up in here. Still, from 111 to 120 is $9 on 111, and that's about eight. That's about an 8% opportunity. So if you were using about anywhere to a $2 to $3 stop, then you have 1, 2, 3, and then if it starts to fail at the PSAR, then you make sure you collect those two. On the short side, I think you want to see this low of the day break, and then that'll give you an opportunity to get short. But if IBM is suffering like that, then you're going to see probably TECS getting long. So I would look for individual companies in tech that are doing really well compared to their peers. But if I wanted to be short that, I think I'd be long the inverse and just play that as a technical temporary passion of hating the techs as a group. All right. So, all right. That's everything I want to cover. Let me get this published and posted. And thank you for your kind attention. And again, encourage you to listen to yesterday morning's podcast when you get a chance. There were some foundational ideas inside there. And the fact that I was able to kind of do the VWAP narrative and then connect it all the way back out to the RLFF, the regression line fractal, and the and trade framing and the Z3 pinch and the idea of acorns. The fact that I felt I did a good job of that in an hour tells me that it's there may be even a better synergy when we look at all of the hybrid trading lessons. There may be a way to get through there because we now have some katas ready to express that we didn't have necessarily in kata form way back in April and May. God, it's hard to believe it's November. Too many crickets. All right, guys, take good care. We will see you ready to rock tomorrow in the chat room in the marketplace. Take good care, and we'll see you tomorrow.